I've seen that Germany was the most struggled region.
Love the cases, love the examples.
I think the first parameter that shows that you're ready is the fact that you're already settled in your home market. What I see and what I understand is that when expanding into new geographies, of course, excitement is the key. They want to do things fast, so they start fast, but then they also get blocked fast as well because they didn't plan enough.
Hi, everybody, and welcome to the Curiosity Code podcast. We're glad to have Elif Ulbrich with us today. She's a fintech and legal tech expert, founder of Contextual Solutions, and a trusted advisor to over 150 startups navigating global expansion. With a background in banking law, business development, so Elif will talk more about that, and contributions to European fintech policy, she brings a unique blend of legal insight and hands-on growth expertise. On this episode, we will chat about the biggest mistakes fintechs make when scaling, the role of regulation in expansion, and the hidden market opportunities that startups should be paying attention to. Let's get started. Welcome to the show, Elif.
Hi, Alex. Thank you for the invitation. It's really great to be here.
Let's start with your background, Elif. Tell me a bit about where you're coming from. I just made an introduction based on the information that I know, that I was able to find about you, but maybe you can, share a bit of more juice about
Sure.
it.
How much time we have? Just kidding. Of course, everything is online, but just to quickly recap so that the audience know who is talking about what, right? So I am actually a fully qualified lawyer. I got a very traditional legal training and then started a very traditional legal career, doing M&A, banking law, etc. And was involved in very interesting projects in Turkey involving project finance and PPP projects, meaning big bucks were involved. And in these big projects, I was not able to satisfy my curiosity, which I think is a passion of yours as well, and get answers to the questions that I needed. And this is why I decided to change my career, start an entrepreneurship study in Germany and, basically discover what's out there. And this is how I moved to Germany. This is how my entrepreneurship experience and my journey started. After my studies, I actually started working at some fintech startups, some venture development companies. And this is how I learned basically how to build a venture, how to, take a project from idea to reality and then expand it further to other geographies. And this is where I learned how to, answer some tough questions and learn the methodology that we're applying today at Contextual Solutions. So after 6-7 years in different startups, I found Contextual Solutions, which is a strategy, innovation, product, and go-to-market advisory. And as you rightfully mentioned, we work with startups, with scale-ups, with venture development studios and banks and corporates. And we help them basically find the right strategy, find the right positioning, and expand into other geographies in a successful way.
Nice. That's pretty exciting. I'd like to get more information about Contextual Solutions and what's happening there. And let's look at this from the your experience of helping those entrepreneurs, to scale their fintech ventures. In your opinion, what's the most overlooked factor when expanding into new market, and how can startups anticipate and mitigate it?
Well, what I see and what I understand is that when expanding into new geographies, of course, excitement is the key. So everyone is excited to expand into a new geography, and then they usually overlook the smaller things, which could actually create big barriers in the short run. A lot of companies do basic market research, basic competitor research, and they usually focus on their direct competitors. But in a lot of markets, they could have entry barriers due to the alternatives that they might have in the markets, or the cultural barriers that, the customers have towards this service, this approach, this product. And these are usually overlooked. Another overlooked aspect is the operational part. So what is being used in your country or in the home country of this product might not be used in that country. So, the crucial part of your solution, which could be like a customer ID, right? Like how do you do your identification? How do you, bring the solution from A to B? Like these sort of things. So, like is the solution paper-based, etc. So these operational things could create like really big hurdles, could basically make you lose time or like also create economical losses for you if these are not, researched properly. But as I said, like the most overlooked factor is usually the indirect competitors and the alternatives in the market.
I think you mentioned aspects of localization. And what's interesting about that is that as much as you want to tailor your product down to particular geography and localize it, you also have somehow managed the scalability and maintaining, the uniform global model. How do you balance this? What factors should determine the choice, which direction you go?
Well, I mean, it's a good question. Definitely, localization takes precedence here. It is because of this era and what it brings to customers and what customers need. And customers need extreme customization. And, this is also something that we have started experiencing more after AI. Customers want personalization, customization, and they want everything adjusted to their needs, to their approaches, and to their lifestyles. What does it mean? If you enter a market as a foreign company, as a foreign entrepreneur, the customers expect you to localize. I mean, didn't they request this or need this before? They did. But now, of course, with the approaches and with the availabilities we have as entrepreneurs, they want more. They want more. They want the companies who just take the leap. They want the companies who are, basically doing the next thing. This is why, as an entrepreneur, you have the obligation to localize, especially in countries where the local culture is very dominant. And this is why before localization, it's hard to scale. So you have to first prove the customers, whether it's B2B or B2C, or whether it's the public sector, that, you're worth it, that you understand their culture, that you respect their customs, and that you're there to stay, that you are a local brand. And only when you prove this, then you can really scale, take your brand and product to the next level.
Talking more about different markets and geographies, you worked across Germany, Turkey, the European Union in general, navigating different regulatory and financial landscapes. In your opinion, what's the hardest market to break into for fintech startups, and why? Are there any specific regions that fintechs tend to underestimate in terms of penetration and business growth opportunities?
Definitely. I mean, it really depends on where the entrepreneurs and the companies are coming from, because of course, you always assume that the culture that you're, getting to is close to the culture that you're coming from. But Germany and the German-speaking countries are definitely a challenge, or has proven to be a challenge. Mm-hmm. Although I hate this, standard answers. It's just I've seen, working here in Germany for over 13 years. Also, working with other EU, geographies, basically expanding companies and products from here to other countries and vice versa. I've seen that Germany was the most struggled region. It's because of the set of rules they have here. It's, if you want to make it, you have to really obey the rules, obey the customs, and obey the culture in a very strict way. You have no flexibility. And only if you are here to understand this and accept this, then you can really create a, long-term product or like a long-term brand. But I've seen that a lot of entrepreneurs, of course, with the passion they have, with the excitement, they want to do things their way, they want to explore things, but it's a country that doesn't basically allow this. But if you know the rules and if you accept the rules, it's a very easy country to operate in. Actually, it's just about accepting them and, making them work for you. Overall, I've seen also the EU to be a challenge for, US companies and also, companies from the Middle East, because of the regulations again. But again, these are things that you have to get into. And once you understand them, it's not that hard.
What about the regions that fintechs tend to underestimate? So other spectrum of difficulty?
I think it's just it just comes with being a successful entrepreneur. You just tend to overestimate any region that you enter. This was my experience. No matter where they were coming from, the next region they thought would be easy because they have done this and this and this. But of course, every region is new. Like in every region, you're a new startup. You're fresh. You have to just understand it. And I think you just have to change this mentality of, yes, I'm a successful entrepreneur. I have exited this and that many times. No, you have to take it as a new challenge. This is a new market. I'm learning it, and this is the start of a learning curve.
Interesting. So, like, geography is clear. What about timing? So, timing, readiness, crucial for successful expansion. Based on your experience, how do you determine the right moment for scaling a fintech product internationally? And what are the biggest red flags that a company isn't ready?
I think the first parameter that shows the metric that shows that you're ready is the fact that you're already settled in your home market. What does this mean? I mean, you have reached a certain maturity, and this maturity should align with your own KPIs, because of course, as a startup founder, you have your own KPIs, in this and this many years, we'll reach this, in this and that many years, we'll get this license, etc. Right? So if you feel like you have reached these KPIs and you have the resources, and these resources are not limited to, monetary resources, it's about time, attention, and basically experience. If you feel like you have this experience to expand, and if you have the team to basically move abroad, because once you're, expanding, you have to divide your attention, and you have to ensure that in your home market, there are people that could cover that the fact that you're not there anymore. Or if you are the one that is staying, you have to ensure that the people that are moving abroad are capable, are experienced enough to handle this, because otherwise this kind of friction that you have in the other market or in home market could basically create like a domino impact, and then just basically have the whole company like have challenges basically in a short amount of time. This is what I've seen. Like one part of the company, one venture starts having experiencing issues, experiencing challenges, and then it impacts all the other organizations as well, because in the end you're all interconnected, intertwined. You're not like a corporate company. You're not Coca-Cola, right? So you have to basically set up the measures and ensure that you are really ready to go.
I'd like to talk more about the difference between how startups and legacy financial institutions act on global expansion, because we had experience with both, right? And I would imagine that startups are more agile in that sense, and they can, survive the storm better. But at the same time, legacy financial firms, institutions, they have more resources. So what's the biggest difference between how startups and legacy financial institutions approach market entry?
Another good question. It's exactly the opposite.
Oh, really?
Yeah, it's really funny. So sometimes we get these requests, and then, of course, we always have these similar set of questions. So what are your timelines? What are your expectations? What are the milestones that we want to achieve? And usually startups have like really short timelines. They're really impatient. They have super unrealistic timelines, like this was supposed to be ready yesterday kind of approach. They would like to enter as quickly as possible. They think that they could immediately get a license. They want to do things fast. So they start fast, but then they also get blocked fast as well, because they didn't plan enough, or they didn't, look into their resources and adjust well enough. On the other side, when you look at the corporates, they would like to ensure that everything is in place. So they would like to get, it's like a government institution sometimes could even, work like that. They would like to get approvals at every stage, paperwork. So, this has to be approved, and this has to be approved again. And then, no, the other department has to approve again. And then in the meantime, they can never fulfill the deadlines they have. And I think, if you ask me what's the right approach, it's somewhere in the middle. You shouldn't be too fast, but you also shouldn't be too slow, because, if you just plan to enter a market in 2 years, the market changes, conditions change, you change. So maybe the opportunity isn't there anymore, right? So the right approach is, of course, planned. You can rush it. Of course, you can try to be as quick as possible, but you have to plan and curate beforehand.
I'd like to come back to the discussion about the geographies, because I have here in file note that you are the EU representative of Fintech Istanbul. Is this correct?
Yeah, it is correct, yes.
So I would imagine that you have a quite strong view on both emerging and established markets. Which regions do you think are the hidden gems for Fintech expansion, and what makes them attractive? Are there specific markets that are currently undervalued but have strong potential for disruption?
So this really depends on the timing. So basically the time of when you want to enter this market depends on your business model and what you want to achieve in that market, and basically a combination of all these factors. Why? Because even the most attractive markets might not be attractive from time to time. It really depends on what they offer, right? I mean, for instance, in the EU or also in the UK, there are some grants, there are some incentives for startups, but they're not, available all the time. So it depends on what your company does, whether, you fit with these incentives and then you can benefit from them. And it also depends on whether your solution, fits that geography. It depends on whether that market is ready for expansion. So for instance, in the last 2 years, like the North European market wasn't so attractive for a lot of startups because of the instability and, the lack of predictability in these markets. So where in these conditions, of course, neither consumers nor corporates want to do anything. They don't want to outsource. They don't want to try out different things. So a lot of the companies that came to these markets in the last 2 years had a hard time. But then now this starts changing, we start unveiling. And this year might, by the end of mid-year and end of the year, we might have a different view on the North American market. Mm-hmm. On the other hand, this kind of blockage in these markets pushed a lot of startups to look elsewhere. And they were basically looking at markets with more money. So the Middle East and I don't know, Azerbaijan, etc. And then these markets became really, really attractive actually. And I've seen a lot of companies thriving there. But of course, again, it really depends on your company and the timing. So, I've seen a lot of companies just, enter the German market or enter other markets because other companies were thriving there. But what is important is to understand is that, is this really your time and is this really your market? So if you combine them, then this is the best market. And there are a lot of great markets as long as your product basically serves there. You just have to basically see that the total addressable market opportunity fits your market, market expansion goals. Like the customers need your basically solution, and you can have a lot of basically opportunities on the table.
You spoke about timing, regulatory approvals, factors like consumer trust, local competition, obviously infrastructure. It can make or break the expansion. Maybe there are other underrated factors or factor that fintechs should prioritize when entering a new market, but often don't.
Definitely. So culture. Consumer culture, and of course corporate and meaning business culture. That is really important in understanding if your product or service is going to be accepted in some markets. Like for instance, a lot of startups, a lot of entrepreneurs just look at the market, and because they don't see this direct competitor or because they don't see a product that is as similar to how they do things, they immediately think there's a market gap. But you have to think whether this is really an opportunity or not, because maybe there is a market gap because, the consumers or the customers don't accept the solution or they don't need it. They don't want it. And you might always think, hey, then I can educate these customers. I can, win these customers, but maybe it's too costly or it's too cumbersome. So basically you have to really look into these things. I mean, a great example I have about this is one company that we work with who basically wanted to digitize lending solutions, basically how merchants were, submitting their lending, their loan applications, and they were doing it paper-based or via fax. And they said, hey, we would like to digitize it. And, they're not submitting it digitally because there are not enough solutions. And we were like, maybe be cautious about it. Let's do some user research. Let's, look into how they do things. And then we, progress with the solution. They wanted to rush into it, and then we were like, okay, let's see. And in the end, it turned out that, despite the digital solution, the merchants still wanted to submit their loan applications via paper or fax because they trusted paper-based applications more. And they said that we don't trust this digital application because here we're required to submit, all of our financial data, all of our, trade secrets, and we don't trust the, digital system, which could be a ridiculous, thought from your point of view, but you're not the customer, right? So you have to always think about the customer. And that's why, culture is usually an overlooked, but a very important factor. Another one is the team. So the team that you enter this market with is really important. What a lot of companies do is to just send one of their very trusted teammates to this market, but you have to really look into whether this person has any experience in this market or, market expansion, because if they don't, they will struggle a lot, which will cost you time and money, basically. What else? Of course, last but not least, market developments in terms of timing. Is it the right time? You should always check whether the market is doing well economically, politically, if they're in the middle of a crisis, or if there is like some regulatory uncertainty from your side. Maybe it's not the best time to enter the market.
Love the cases, love the examples. I'd like to address to the listeners. You may be listening up to this point and wondering why we haven't mentioned AI yet, because in every single episode that we speak with our guests, we actually talk about AI a lot, and probably like all other media doing this. And we're going to fix that now. So I'd like to wrap up the conversation and shift the conversation towards AI, because Elif contributed to books on AI and fintech law, exploring the intersection of regulation and technology. Elif, how do you see AI-driven compliance tools influencing the way fintechs expand into new markets?
Before tools, I would actually like to explore AI compliance in general and its impact on global expansion. So the way I see AI impacting these situations is it's a vortex. The thing is, AI is enabling us to enter other markets easily. We have these tools to comply in different markets. We have the information and the support, the infrastructure, but also AI is making things a bit unclear. Why? Because, AI regulation is not there yet, and it's also not standardized. And also, the perception of AI and the acceptance of AI is not the same in all the markets. So in a lot of markets, you might see the excitement, of course, if you look at the mainstream, channel, but then we always have to see behind the facade and, try to understand if the customers in that market, if the regulators are in that market are ready to explore AI solutions. The thing is, if you don't use AI, if you don't use AI infrastructure in your product or service, it is quite, unlikely to get funded or to get excite the venture capitalists these days, right? That's so you have to use it. But then when you use it, then it's also immediately bringing you suspicion, because then people start asking, okay, but how is this regulated? Will you need a license? How will this be governed? How can we standardize that? Is this ethical AI? And you don't have answers to these questions because no one has answers to these questions in the full scope. This is, of course, bringing this unclarity of, how to balance innovation with, regulation and governance, right? You have to basically find the right balance where you are basically, of course, offering the innovation the market needs and wants from you, but also you have to give the clarity to the customers, to the government, to the regulators, and ensure them that you are doing a good job and that you're basically fully compliant to rules that don't exist. So it's a tough job, and also, when we go to events or when we talk to, providers working on AI, it's always the same. They say, we talk to people, we talk to potential B2B customers. They're always interested, but they tell us, let's wait and see. We just want first movers. We want the regulators to move first. We want the, bigger companies to move first so that the risk is mitigated. The risk is lower. We want to jump on the board later. So this is the problem with scaling AI solutions and basically having go-to-market strategies in the times of AI.
Do you observe that in like many geographies or predominantly in Europe, because Europe is more like focused on regulations?
Yeah, of course, that is clear. But I mean, the thing is, the mainstream AI wave hit us just now. But people have been working on AI since years, and they were, applying this logic to lending. They were applying this logic to other decision making, like account decision making, and etc. And the results weren't great. And I think this is what scared the corporates and the banks off in the first place. Now they're just looking into the correction era where things are a bit better for them, so that they don't have responsibility. Because in the end, when you look at B2B relationships, it's all about responsibility and risk.
Mm-hmm.
B2B companies don't want to take risk; they don't want to be responsible. They would like to keep their reputation intact. So unless you can really 100% ensure this, a lot of companies would be, and a lot of financial institutions will be suspicious towards you. And this is why, as founders, as people working with AI, you have to be really diligent. You have to really know your regulations, know the governance, and basically follow the market really closely, so that you give the confidence to your counterparties that you know what you're doing and that you're trustworthy in working on this.
Excellent, Elif. Thank you very much. That's been a great conversation and insightful. Appreciate it a lot. Thank you for being a guest on the show.
Thank you, Alex. Thanks again for your invitation. It was a very fun conversation for me too. By the way, we have a lot of free studies on our website for the companies that are interested in the European market, on the German market. So we have also free checklists. So, it could make the market a bit, or, the pain of entering the new market a bit easier. If, we could provide the links if that's okay for you. And then maybe your listeners could, benefit from that.
Yeah, absolutely. Sounds great. And for the listeners, as usual, thank you very much for listening. And don't forget to subscribe if not done yet, and hit that like button. And now we are Apple Podcasts, Spotify, YouTube. So don't forget to leave the feedback there if you like the show. Thank you, and see you next time.